We understand car finance can be a little daunting, with so many options available and different products to choose from. Luckily, you found Zuto, and we're here to help you understand popular options like hire purchase, PCP and personal loans, and how to decide what option is right for you. Let's start with hire purchase agreement, or HP as it's sometimes known. A hire purchase agreement is one of the most popular types of car finance and is one of the most straightforward to understand. Once your agreed term has ended and you've made all your payments, you will own the car. You pay the total amount borrowed plus any interest over a set period of time through regular monthly repayments. If you want to lower your monthly repayments, you can extend the term of the loan. However, this will increase the total amount repayable. Choosing to pay a deposit, although sometimes optional, is another way to do this. Zero deposit options are just one of the many advantages of a hire purchase agreement. There are also no mileage restrictions, which could be one less thing to worry about for those who have long commutes to work or are uncertain on how often they'll use the car. Finally, because the finance is secured against the vehicle, the lender owns the vehicle until the final payment is made. This means you get an extra level of protection in the form of support and guidance if something was to go wrong with the vehicle. Now let's move on to a personal contract purchase, also known as PCP. This type of finance is popular with people who like to change their car regularly and would prefer lower monthly repayments. With a PCP plan, instead of the finance payments being based on the total loan amount, like a hire purchase agreement, they're based off its depreciation value instead. For example, if the car you buy costs £20,000 and is expected to be worth £12,000 in 3 years when your term ends, your payments will be based on the depreciation of £8,000 and not the full £20,000 value of the car. One of the reasons it's popular with people who prefer a lower monthly repayment. Another way to determine what finance plan is right for you is the PCP agreements may require a deposit and come with annual mileage restrictions which you can set. With a penalty being due for every mile you exceed your allowance by, this is definitely something to be aware of before considering PCP car finance. Once you've made all your payments, including any interest, you'll have 3 options to choose from. Option 1. Pay the agreed final payment, sometimes referred to as the balloon payment, at which point you'll own the car. Option 2. Part exchange the car using the money to settle the balloon payment and any further equity as a deposit towards the new car. Option 3. Hand the keys back and walk away. The final car finance option is a personal loan. This is the only finance type that isn't secured against the vehicle itself. This means you own the car from day one. You'll receive a lump sum from the finance provider, which is used to pay for the car, with an agreement to repay the full amount plus interest over a set period of time through regular monthly repayments. Unlike HP and PCP, if there is something wrong with the car, you'll have less protection with a personal loan due to it not being secured against the vehicle itself. Whichever car finance option you choose, Zuto are here to help. We work with a large number of lenders comparing hundreds of products to find you the best deal based on your personal circumstances. Apply today with no risk to your credit score. Zuto, car finance made simple.